Hey, you know it's everyone's favorite time of the month yet again. That's right. Stocks to buy. This time for November. Gonna have a good Thanksgiving, and on top of that, we're gonna make some gains in the stock market, okay? That's the best Thanksgiving present ever. You don't get presents on Thanksgiving, but you will this year in the form of this video. Let's go. Three companies for you today. Nothing too expensive for us in terms of share price, so but nothing too cheap either, so pretty middle of the road. I have a couple stocks I think are decent values. One is going to be returning from last month as well. Firstly, iRobot, man. What's going on with iRobot? Why is this on that list? So, if we're looking, obviously on the week, and this is what made it come to this list. This is what made it arrive here. Down 14% this week. Okay. 1 month down. That's right. 6 months. I keep over highlighting. 50% down. Yikes. I mean, this is rough stuff. 5 years still. I mean, this is 41% up for 5 years, but it's way off of its highs. So, part of the reason would be they reported earnings this week or this previous week, which were by all means a very good earnings. They doubled the expectations in an earnings per share standpoint, so they doubled their profit, and they beat by 30 million. When it's a smaller revenue company, 30 million is a lot for them. I mean, 30 million represents 1/8 of their business almost, and up 10% year over year in sales. So, iRobot, it's got to be a buy, right? If we're looking valuation here, I mean, this PE of 15 right now, it's hot. That's a hot valuation for me. They do not pay a dividend, okay, but in terms of cash to debt spread, there's no worries there. Their balance sheet's good. They have a good balance sheet. They make good profit. I think that the valuation is good for us now. I think it's good valuation for this stock right now, and I think it's worthy of a buy. Overall, I think this could equal some good gains if you purchase this stock at this price. Obviously, just Friday here, there was a little bit of a bounce back. Obviously, I think there was a little bit of an unjustified response to earnings. Part of that was due to a forecast being, the forecast didn't line up necessarily with what this earnings showed. The forecast was pretty much exactly in line with what they were expecting. So it was what their previous consensus was already. So obviously, I think people expected another breakout quarter after this kind of a quarter. And I think that's why the stock went down. So even after a fantastic quarter, you still get massacred. That's just how it works, really, with guidance. But I mean, iRobot, you'll know them for the Roombas. I mean, this is the future of cleaning houses, would be Roombas. They have a lot of different models. Look at this. Everyone mostly know them for their Roomba. So it's a real cool device, and I think it is the future. So I think iRobot's a very good company to invest in at this point. Secondly, our recurring bad boy is going to be Activision Blizzard. Activision Blizzard, getting slizzard. I don't know. There's a Kesha song or something like that. So on my 1 month since I suggested purchasing it, it is already up 5.6%. Just to say, just got to point that one out there. But why do I think this is still a good purchase? Well, their suite of games. I mean, what's going on? They're having a very good year in terms of games. If we look at their portfolio of games, obviously they have the Activision Blizzard brand. They have the normal Activision brand, which is famous for Call of Duties. Most importantly known for their Call of Duties. They have Skylanders, Sekiro, and Spyro. Blizzard, you'll know from StarCraft, World of Warcraft, Overwatch, Diablo, and Hearthstone. Again, these are huge games. Everyone knows about them. People still play Overwatch to this day. They still make a lot of money off of the Overwatch League. Obviously, there's been some controversy with some Hong Kong protesting. I can't mention that here because obviously they'll ban me. But there was some controversy. But overall, this is a very, very big money maker for the company. Blizzard alone makes a lot of money. It's great acquisition by Activision. King, you'll know from Candy Crush Saga. They have Pet Rescue, Bubble Witch Saga, Paradise Bay. 200 plus titles to carry the King crown, baby. Obviously, their top performer still Candy Crush, still growing users to this day somehow, still increasing revenue to this day, and that's just a small portion of their business. This King part of it, so it's just another big thing. Major League Gaming, obviously they're a big part of Major League Gaming again with Overwatch, and it's only going to expand further as other games get on there. Call of Duty is a huge game in terms of potential for Major League Gaming tournaments. Really, it's just the brand here is good. And speaking of it, also they obviously had just released Call of Duty Mobile, but they just released Call of Duty Modern Warfare. And if we're looking, I haven't seen specific numbers, but this is just a list of the most pre-ordered games that were announced at E3. Call of Duty Modern Warfare was top of the list in terms of pre-orders, and there's a good reason why. I mean, Call of Duty's always purchased no matter what. The people were very excited for this one, and I know from just my personal group of people I know, Call of Duty Modern Warfare was certainly pre-ordered quite a bit, and I know pretty much everyone that I know is going to be purchasing it. So, and then, 15th of the month, Activision Target lifted on title upsides. Again, City, more like crappy, if you know what I mean. I'm not going to say the word, but, it's crappy. Just raise it to $55. That's a bit of nonsense. This stock's going to be $65, no doubt. Morgan Stanley raises it to $60. Give me $65 by this time next year. I mean, I'm just telling you how it is. So that's pretty cool, but Morgan Stanley raised it. People care a little bit more about Morgan Stanley than they do Citi, because Citi sucks. So, valuation of the company, if we're looking, forward P of 21.84, not bad for a tech-ish company. Again, they pay an all-right dividend. They're cash to debt. They have a good balance sheet. I like Activision. I just do. I really do. Obviously, they're going to be reporting earnings this month as well. I like Activision here. It's just a thing. I'm a big fan of Activision as a company. I think that the stock could use a little bit higher valuation on it, and I think it will get to that point. So we'll take a little peek at it and move on to our next contestant in this, which is, that's right, no brainer. Am I right? Bank of America back. Bank of America, baby. Why do I love Bank of America? Well, first and foremost, I love my dividends, and Bank of America is the company for dividends. Just a consistent dividend giant. Right now, 2.27% yield, payout ratio of only 25%, 5-year growth rate of 68%, and dividend growth of 6 consecutive years. That's right, 6 consecutive years. Fantastic. I mean, what more do you want to know? It fits all my criteria. Dividend growth over 5 years. Lower payout ratio. Yield isn't quite at 3%, but guess what? It's a good solid rock. If you're looking just historically at the price of the stock, it is a pretty steady stock. 5 years up 84%. I have no concerns in terms of valuation, but I mean, this is a lovely, just steady stock. It's a good thing to have in your portfolio. If we're talking about valuation on the company, forward PE of 10.6, trailing PE, current PE of 11.69. So the valuation's good there. Cash to debt, they have a very good balance sheet. There's no doubt about it. I love that balance sheet. Love the dividend yield. I mean, what don't I like about this company? They make a lot of revenue. I mean, look at all this. They just make profit like no other. They aren't necessarily a growth machine at this point because that's not what I enjoy them for. I like Bank of America because they are just a consistent rock to have to your portfolio. I don't think you're going to be getting significant amounts of capital gain, but obviously they reported earnings last quarter too, and they're very good earnings. Beat on an EPS standpoint and revenue of 23 billion, which is pretty well flat on the year, but beats by 70 million to expectations. So overall, this is a good company in my opinion. I like Bank of America a lot. I think they're going to be poised for success. I think it's a good rock to have in your portfolio. These are my 3 stocks to buy for the month of November. Happy Thanksgiving. Happy Halloween. This is coming up before Halloween, so happy Halloween. Enjoy your Halloween. Get some candy. Eat some candy. Spend that candy. Spend the energy from the candy investigating on these stocks, investigating or researching, and then buy some stocks, people. I'm in narrator mode, so I'm super quick talking, and you can't stop me. So that's just kind of how it is. I'm going to be the one that's talking at the end of those drug commercials. Do not use it in case you have a heart attack. Could worsen the chance of a heart attack. Yep, there you go. Bye.